Introduction to Taxation, Week 13. Edgardo Almagalso, MPA, Subject Teacher. What is taxation? Taxation is the government's inherent power to impose compulsory levies on individuals, businesses, and properties to generate revenue for public needs. Governments use taxation as a mandatory financial obligation, not requiring taxpayer consent, to fund essential services like infrastructure, education, and defense. It applies broadly to income, sales, property, and other assets, with rules varying by country and political system. Unlike fees or fines, taxes aren't tied to specific individual benefits that support general welfare. Main implications: taxation raises revenue, accounting for 80% of government funding in many nations, but also regulates behavior, redistributes wealth, and influences economic activity. High taxes can reduce disposable income and business investment, while low rates may limit public services. Evasion or poor enforcement strains economies. Developing countries often rely more on consumption taxes due to weaker income collection systems. Lifeblood doctrine. The lifeblood doctrine, also known as the lifeblood theory, views taxes as the essential revenue source that sustains government operations and public services in the Philippines. It underscores taxation's compulsory nature to ensure the state's survival without undue delays. Taxes are described as the lifeblood of the nation, providing funds for essential functions like infrastructure and law enforcement. This principle, rooted in Supreme Court rulings, holds that government cannot exist without compelling contributions from citizens and property within its jurisdiction. Fundamentalized taxation refer to the basic principles of a sound tax system, which identify the following: fiscal adequacy, administrative feasibility, and theoretical justice. Fiscal adequacy. Fiscal adequacy is a fundamental principle of a sound tax system, requiring that revenue generated from taxes must be sufficient to meet the government's expenditures, public needs, and obligations. It ensures that the government can fund services, manage public debt, and adjust to economic changes without constantly facing budgetary deficits. Taxes collected by the Bureau of International Revenue must be sufficient enough to fund the necessary government expenditures and basic services in a given fiscal year. Revenues must be capable of adjusting to variations in public expenditures. The alternatives are to incur the risk of a series of deficits or surpluses due to inelastic revenues. Administrative feasibility. The tax system should be capable of being properly and efficiently administered by the government and enforced with the least inconvenience to the taxpayer. It means that the tax must be plain and clear to the taxpayer and should be capable of efficient enforcement by government officials. Each tax should be clear and plain to the taxpayer, capable of uniform enforcement, convenient as to time, place, and manner of payment, not unduly burdensome upon or discouraging to business activity. Theoretical justice. Theoretical justice, also called equality or the ability to pay principle, ensures tax burdens are distributed fairly based on a taxpayer's financial capacity. In the Philippine taxation system, it aligns with constitutional. Theoretical justice requires that taxes be proportionate to ability to pay, meaning those with higher incomes or wealth contribute more while protecting the less affluent. This promotes social equity without arbitrary discrimination. Mandates for uniform, equitable, and progressive taxation. Tax amnesty and condonation. Tax amnesty is a time-limited government program granting immunity from penalties, interest, and criminal prosecution for unpaid taxes from prior years upon payment of a reduced base amount. Enacted via laws like RA 11,213/2019, it covers internal revenue taxes up to 2017 or later per program, targeting delinquent taxpayers to cleanse records and boost collections. Tax condonation, often via tax relief acts, fully forgives certain liabilities, principal, interest, penalties for specified periods or disasters without requiring payment. Unlike amnesty, it may not grant immunity from future audits, but provides outright waiver, as seen in local government condonations for real property taxes.